Hello, everyone. Joe Mass here, Chief Investment Officer. Hey, it's been about a week since the election. I just want to put a quick voicemail out voice memo out here today. We'd like to record something in a video, but we're gonna give it a few more weeks. Again, there's a lot of still uncertainty. We think Biden's won, but really what the markets are waiting for is to see if the Senate is held or if we have split government. Again, the market likes split government. So that is a positive. Again, about a month ago, the markets were having some trouble. Luckily, we had moved to cash and mitigated some of the downturn. And the reason that had happened is that the market at that time thought it was going to be a blue wave where the Democrats would take the House, the Senate, and the presidency, and that could have ended in some policy that might not have been as friendly for the market as a divided government. So we looks like we're going to have a divided government. And so that's a positive for the market. But a month ago, the market tanked on that news. About a few days before the election, the polls started to change, and then election night and the days after, of course, when it looked like we were going to have a split government, the markets have started to rally. Again, last Sunday, today being, what is today? The November 11th, Pfizer just came out on Sunday announcing that they had a vaccine, and the market really liked that news as well. So that added some fuel to the fire there. So our technical indicators are turning positive again. This is a rebalance month, and we will be putting some money back to work. So we'll be looking for some trades in the next couple weeks. And then again, when the final Senate runoffs in January happen, we'll pay attention. If we need to move back into some cash or be more defensive, we will do that. So let me just give you a couple points here. Before the election, the same things that move the markets are still true today, and they're still okay. So when we look at interest rates, inflation, corporate earnings, and the Fed, all four of those factors are still in a positive regime for the market. So we have low rates. They're not going to go up for a while. We still have low inflation, and corporate earnings are doing a lot better than expected and are recovering. So that's all positive. The fiscal policy, we still believe there's going to be some more stimulus packages between now and the end of the year, and then, of course, into next year. And so we do expect that to continue to support the markets. And so in sectors like tech, healthcare are probably going to outperform, and then quality large cap stocks are going to perform well. Small caps have been doing well over the last few weeks or few days, but again, we still believe it's going to be a large cap market. Now, we have seen a little bit of rotation since the announcement of the potential vaccine from the growth tech companies into a more cyclical and broader and see more broad participation in the markets with other companies, and we expect that to continue. But over the next 3 to 5 years, we still expect that large cap tech to really lead the growth, and that's where the opportunities will be long term. The emerging markets have done better. Again, China is the major emerging market country, and the market believes that China and a Biden administration will be favorable. And the debt is, the debt's kind of getting out of control. But again, the market's kicking that down the road until we see rates start to rise. So we still have a few more years before the market might react to that. So again, I just want to take a quick minute to let you know that we've done pretty well through the election. We are going to put some more cash back to work. The COVID has been, the vaccine has been positive news. The split government has been a positive news, and this is a rebalance month. So watch for some trades. Again, even though we're becoming more bullish at the moment, we are still cautious. We do not believe that all the risks are away. There's still severe political and geopolitical risks in the market, and we're just going to have to wait for the news stories and the elections and the contested period here by the Trump administration to play out. So we're not out of the woods, but if the Senate is held by the Republicans and Biden stays as the president, a split government, the markets are appearing to favor that right now, and that's where we think we're at. So if you have any questions, please give us a call. Otherwise, we will be making changes as necessary, and we'll put a video out here in a couple weeks as we get more information. And again, we're always basing our decisions on critical facts and the preponderance of the math and science and the evidence that we're given. So as new evidence presents itself and we change our decisions, we will keep you posted. Thank you so much, and we'll talk to you soon. Thank you.